Welcome back. You're tuned into Bazaar Morning Call here on CNBC-TV18. Well, good time to get in Prakash Diwan and discuss all the stocks that we just presented for you. Morning, Prakash. Thanks so much for joining in. Well, Prakash, you would have heard what Sonia had to say. Bharat Forge, they had an analyst meet. They're guiding for a good growth, in terms of revenue, mid-teens for the next few years, margins improving as well as ROC improving. The kicker is going to come because that defense business is finally going to start reflecting in terms of revenues. What's your view on the stock at these levels?
Good morning, Nigel. So I do echo the buoyant outlook that's kind of coming through for the simple reason that all these years we'd seen the company struggle a lot with in terms of the formative stage that it was on the new vertical of defense. But what's happening is this whole Atmanirbhar, focus on defense particularly is kind of developed that ecosystem very rapidly, to the extent that even the quality controls that you have in some of the products that Indian companies are making is become much more sharper, stringent, and rapid in terms of outcomes. And that's exactly one of the reasons why the sales cycle for some of these companies which are looking at exporting is become very strong. So first we started with the domestic requirement, the import substitution bit, but then there's this element of export ability which is getting to be very strong. Bharat Forge has experience in global markets on the ancillary business. All it needs to do is replicate this in its complex defense vertical. Remember, the meet very clearly, the highlights of the meet were simple, that they've decided to focus on defense under a brand, which is the Kalyani brand, and try to kind of, position it in a way which is very distinct and get into complex products on the value chain. So it's not just simple stuff that they're doing. So this will take time. It's a lot of promise that's there. And by the time the guns start getting into usage and the input starts coming back in terms of what needs to be done to scale up, it'll probably be end of next year, next calendar year. So till then, of course, it's going to be, up and down for the stock depending on other businesses and other news flow. But I think it's a great portfolio pick once the defense vertical matures. So keep a watch. Don't be in a hurry to just buy into it because of what it's promised. But what it tells you is that the stock is no more going to be valued on the lines of on the auto ancillary business that it has all these years been facing. So it's moving into a next orbit. Be ready for that.
Okay, and you can see it move into the next orbit on the stock as well, right? I mean, the stock has been range bound for the last, I think, a year or so, and now suddenly taken off. But let me draw your attention also to what's happening in the banking space, because there are several upgrades that have come in over the last many days. And this morning, Punjab National Bank could be in focus because JP Morgan has upgraded to an overweight. Prakash, I want your thoughts here because the target price has been raised to 72 from 34. Do you think it's a little late in the day for an upgrade on PSU banks? And what do you do with these names now?
Good morning, Sonia. So, the PSU banks are going to go through a very classical cycle of growth, cleanup, growth, hyper growth, and then again, NPA creation at some point. So it's going to be that. Right now, I think if you look at some of them, been off the blocks much earlier, like a Bank of Baroda or a Canara Bank, and that's what's being captured in the ROAs, which we've started seeing inch towards that 15%. Rubicon, in some of these cases like Canara and all. But the rest of the banks were too late to, play into this cleanup, cycle. And because of that lag, you'll probably see the likes of PNB and all, even Central Bank or Bank of India start moving into that zone very soon. So I think what this report tells you is that there's still some time left in PNB to see that upside happen. It's not yet moving, but, this target seems to be a bit too optimistic according to me, because PNB's not yet had this demonstration effect in terms of what they can do when things start moving better for them, because they've stumbled into these kind of situations earlier as well, when everything's good for the sector, but then they've had their own self goals of sorts. But importantly, what's going to happen is if you select a bigger bank which is still beleaguered or getting out of the woods, you'll probably make more money than you do in an SBI. That's what's coming through. So yeah, I mean, you could still make some money, though, it's already moved up 50% in the last, 6 months. But there could be still another 30-40% left to take off. But that's a very different risk reward that you would have to evaluate. But I would recommend buying into it at this point in time for sure.
All right. the left out feeling, FOMO feeling is not just traders feel it, right? Analysts feel it as well. Analysts and portfolio managers, very, very real. Well put, Prakash. Thanks for joining us as always. The one space which cracked big time is IT services after that HCL Tech sort of commentary, right? Big cut. I mean, the index itself was down 3%. Very large bar. What are your thoughts here?
Prashant, I think IT, we saw this whole numbers coming through in Q2, which were not as disappointing as what we were anticipating when the earnings season took off. For the simple reason that there's been veritably no change in contracts from most clients. But the key element of this thing is going to be the moment of reckoning is going to be when the new year starts. Whether some of these non-discretionary accounts are actually going to be improved on, or in terms of quantum, whether there's some sort of a scale up. If that happens, then some of these companies do tend to again kind of start seeing some revenue visibility. But and mind you, Q3 is going to be even more misleading because typically it's a lean quarter, and this time around you had very low attrition, so wage cost has been low. But some of these contracts keep on getting over closer to December, which means there's a little bit of a lumpiness in revenue as well. So Q3 numbers will also be decent, but I think I would wait for contract renewals to be an indication or a trend to be set there, and then look at getting into IT. But till then, IT will probably be sideways, if not downside. This thing reactions into the stock prices, but I don't think there's any upside immediately for the time being. I mean, till mid-Jan, probably end Jan, you'll probably not see any kind of a spark coming back. So it's good to book profits if you're a trader, but on a long-term basis, I think it'll pay off once you listen to the commentary coming through in Jan in terms of new contracts.
Okay, it's important. We will, of course, get you a slew of IT names to tell us whether it's just restricted to HCL Tech, the kind of pressure that they're seeing, or is it across the industry? So that happens in moments from now.